Hi everyone, welcome back to the Accounting and Tax Helpdesk podcast. I'm Nima. I'm an accountant and CPA with the Alamir CPA and Associates located in Calabasas. We are here to talk about different tax topics, and today we're gonna focus more on about the tax planning and the strategies that you do during the year. So let's dive into the tax planning. Tax planning basically, and what's the difference between tax planning and tax preparation? So tax preparation is a reactive. You crunch numbers, you gather documents, crunch numbers, and you say this is the amount you owe taxes. It's after the fact. It's after the year ends, and you can't do anything. It's like like a cleaning up a mess after a party. Let's say you go to a party and the day after you're hangover. So, because you didn't have any plan. Let's say the other scenario. So you go to a party, you drink some waters, you have a couple of shots, drink more waters, talk to your boyfriend or your girlfriend, say, am I okay, or how do I make sense or not? So you plan during the day. So the day after you might not be hangover. You still might be hangover, but hopefully you do it, do the thing that was planned. So the same thing with the tax planning. It's like you do it during the year and not after the fact. So you minimize your tax liabilities and then avoid any tax penalties by planning and play like a chess game during the year and decrease your tax liabilities and avoid any surprises. So tax planning is very crucial for small business. First thing, you want to avoid any surprises, and then the other thing is you want to know where you stand for. Like, you do you owe any taxes, or you don't want to surprise with the big tax bills, and you want to manage your cash flows. So for any small businesses, and it's not, there is no magic for tax planning for small businesses. It's the combination of all small strategies that when they combined, it's going to be a huge help and then save you a lot of taxes and help you for cash flows. And then the CPAs cannot do the magic for you too, so you need to be proactive too. So as a business owner, you need to be in contact with the professional and do what they're saying. Because for example, let's say the professionals say you need to have a retirement account. That's all they can do. The rest is on yours. You need to go set up your retirement account. After the year ends, if the year is over and then you haven't opened your retirement account, even if you got consulted with your CPA and you plan for it, but you haven't done it, so it's not going to help out. So you need to be as a business owner, you need to be proactive too. Your CPA needs to be proactive too. You always need to communicate and predict all the estimated taxes and all the tax saving strategies during the year, not after the year ends. So let's say you started a business, and then sometimes a lot of people call, say, I started a business and then I want to start consulting with CPA and start my books. So that's the perfect scenario. So you start from the beginning, you consult with the CPA and have your books ready. But sometimes I know it's tough. Sometimes the money's not in yet, and you just have a bunch of expenses. I would say the best time that you start really planning your tax strategy is when the money comes in. Before the money comes in, it's not the end of the world. You can do your work and then you focus on your business. It's better to have a proper accounting. It's the best scenario is from the beginning. You start with the CPA and consultant, but if the cash is tight, it's all right. If the money is not in yet, if you haven't do the tax planning, it's not the end of the world because the money is not in and you don't have any tax burden. But as soon as the money comes in and then your business is growing, is the time you start planning for your tax, and you need to start consulting with the CPA and professionals. So what are the first steps for tax planning? First, you need to know who you are, like any other things, where you stand, like what is your business structure, what's your tax obligations, because it's not just the income taxes. You might have sales tax, you might have payroll taxes, you may have a lot of city business license or any different taxes. So it's that you need to know what your tax obligation is. You need to know where you stand. So you need to know if what your books is like, you're making income, your expenses. So you need to have proper bookkeeping. You need to have a proper structure for your business, and you need to know your tax obligation, different tax obligations. And then the best way to address all of this is just consult with CPA or professional. So a lot of question I get, okay, so I started my business, so is it better to hire contractors or employees? First, there are sometimes it's not an option. It's a requirement based on the nature of the work, and based on the state you live in is sometimes a requirement to employ some people. So it's not the options to have some people as the contractors. It depends on your state that you live in, but you can consult with your CPA. But for the benefit, it's so if you have a contractor, you don't need to pay payroll taxes. You need to provide the health insurance, but with the employees, you need to pay the payroll taxes. You need to provide the employee benefits. But again, sometimes it's not an option. It's a requirement to employ some people instead of being their contractors. Let's talk about how the business can predict the tax liabilities during the year. Again, you need to know your structure, then you know where you are. And the best way to know where you are is maintaining the proper bookkeeping. You need to use professional and to keep your books ready every monthly. So each month, each quarter, you need, okay, I made that much money, or I'm losing money. So with the proper bookkeeping and financial statements ready, you know where you are. So then each quarter, your accountant can do the projection, and you know your tax liabilities each quarter. So then you're not going to be surprised at the end of the year. Sometimes the client doesn't have the proper bookkeeping. They don't even know how much they made. They think they made a lot of money, and then when they do the proper bookkeeping, it's not that much. Sometimes they think they didn't make any money because they made a lot of loan payments. The cash flow is not good. They think they didn't make any money. But when you do the proper bookkeeping, they see that you get surprised that they made a lot of money, and they're saying, why I didn't make any money. But when you look at their books, they paid a lot of their liabilities. Means their business made money from operation, working capital. So basically they earn money. Maybe they don't have cash because they borrowed money in prior years, but now that they have income, they paid off some of those loans, so they have more equity in their business. They have less liabilities, so they have to pay taxes on that income that they earn. So it's good. Maybe it's going to be but if they don't have the proper tax planning during the year, they're going to be surprised, and they have to pay a big tax bill. So if they do the proper bookkeeping and then planning during the year, they don't pay that much loan, because first they need to think about their tax liabilities too. So that's why the tax planning is very important during the year with the proper bookkeeping, to make sure they cover and not be surprised with those tax bills. Business loans and credit, like line of credits, how they can help the business. So first, you can fund your business through equity or loan. So when you loan, you basically borrow money. The cost is the interest expense. So interest expense is deductible. Paying your principal, your monthly payment is not deductible. So just only portion of the the loan payment that it's interest is deductible. So again, if you're paying $100,000 on loan payment, don't expect your taxable income would decrease by $100,000. The benefits of a loan would be, like, for example, in a lot of cases, like, okay, especially in real estate, you borrow money, you take the property, and they take the depreciation. So that would be one benefit of non-cash activities that you get the write-offs. But you need to always remember the proper business structure. If you have an S corporation, you cannot deduct expenses against your loan. If you have an LLC, you can. So that's why it's proper structure during the year is all important. If you have a wrong business structure for a business, then you may have a lot of problems. So always consult with CPA about the business structure and getting a loan, and then what's the proper business structure would be for your business. So let's talk about how the proper tax planning help with the cash flow. So we talk about it, the surprises, like, okay, if I don't plan it, then I may have a big tax bill at the end of the year. So with the proper tax planning, so you know where the cash flow is. Like, we know how much you owe taxes, and then if you plan it quarterly, so you're not going to pay a big tax bills, and then you know how much you will pay each quarter, and there is no surprise that you can hire more people or lay off some people, or you can get new equipment. So with the proper tax planning, you know where you stand, and then you can increase your cash flows, because with the proper tax planning is you decrease your taxable liabilities and you have more cash available. You free more cash. So you need to have proper accounting, bookkeeping, and do the tax planning during the year, not after the year. If you have a seasonal business, you still need to pay taxes on that income that you earned in that quarter. For example, if you 90% of your income is in December, because of you're in retail, so you pay that portion of your tax in that December, that fourth quarter. So the proper tax planning helps you with to cover all of those tax liabilities during the year, help with your cash flow, increase your cash flow by deducting your tax, and you have more cash to enjoy life. So with this episode, we discussed more about tax planning strategies. We talk about being more proactive during the year. After the year is late, it's like cleaning up a mess after a party. So with the proper tax planning during the year, you help with your cash flow, you will avoid any penalties, and you have peace of mind, and you decrease your tax liabilities, and you save more for yourself. Thanks for listening to this episode. Please like and share your thoughts with us, and then please subscribe to our podcast. And if you have any questions, please reach out to helpdesk at alamircpa.com.